All you need to know about the Australian dollar is that a currency is a reflection of two economies, and we talk about the Australian dollar and the US dollar. So Australian dollar against the US dollar. Australian dollar has been weak. The reason for that is the US dollar has been strong on the expectation Trump's going to be coming in with pro-growth policies, tax cuts, and that's going to drive the US economy and going to keep interest rates higher in the US because it's going to reflate inflation. And on that basis, the US dollar's going up. On that basis, the Australian dollar's going down. But the Australian dollar's also going down because the Australian economy is a reflection of the Chinese economy, which is wilting despite many calls for stimulus. We have yet to see anything concrete from the Chinese, anything convincing from the Chinese. And if the Chinese economy is going nowhere, Australian economy is going nowhere. And on that basis, the Australian dollar's going down. So at the moment, we've got a situation where the anticipation for 2025 is that the Australian dollar's weak, the US dollar is strong. And what that means, and the most significant part of that from an investment point of view, is that whilst our domestic institutions invest in the Australian market and they just sit there with their allocation, international institutions are the mobile money in our market. They're the people that move prices. And if they perceive the Australian dollar going down, they will asset allocate in their asset allocation meetings, in their ivory towers, in capital cities around the world. They will look at Australia and go, the Australian dollar's going nowhere because China's going nowhere. Let's pull out of Australia. They don't want anything priced in Aussie dollars. If the Australian dollar's going down, they'll pull out of Australia and put the money in another country, another economy. They'll go underweight Australia if the Aussie dollar's going down. That's quite important for our market. We're going to be swimming against the tide as an equity market unless the Australian dollar goes up, and it's going down.